Welcome to TradingPennies.com Chart of the Week, where every week we will examine the trading strategy behind one of our explosive daily stocks picks. All of our strategies are covered in detail in our manual, Learn How Professionals Trade the Penny Stock Market, available on our site at trading-pennies.com. This week's chart is Enzyme Environmental Solutions Incorporated, ticker symbol EESO, a manufacturer of industrial and agricultural enzyme products within the consumer services sector. What caught our attention in this stock was a cup and handle breakout pattern that was followed by a breakaway gap play best seen in the daily chart. As noted in our manual, How Professionals Trade the Penny Stock Market, cup and handle patterns are some of the most profitable and predictable patterns to trade, and seeing this forming in Enzyme Environmental Solutions on February 9th of 2009 placed it on our watch list of potential breakout stocks. In review, a cup and handle pattern is formed from a prior breakout. In this case, you can see this displayed on the chart of late October of 2008. The high of the breakout forms the left side rim of the cup, which in this case formed at 0.0014. As the stock pulls back, it forms the left side of the cup. During this period, it is likely that there will be increased volatility. In other words, there will be greater range among the highs and the lows, and the volume in whatever time frame you trade, as in this case can be seen on the daily chart. As volatility decreases, the stock begins to form a base. It is important that the lows of the base do not exceed 50% of the prior breakout range from the low to the high that formed the left side rim of the cup. A break of this increases the likelihood of failure of the pattern. The right side of the cup is formed by a gradual increase in price that does so on lower volatility and volume. In the case of Enzyme Environmental Solutions, you can see this occurring late December and into early January. The rim of the right side of the cup is formed slightly below, at, or slightly above the high that formed the left side. From here we look for the formation of the handle. A proper handle is formed when the stock pulls back on lighter volume and decreasing volatility, and the low of the handle does not exceed 50% retracement of the low of the cup's base to the handle's high. In the case of Enzyme Environmental Solutions, this occurred as it compressed into the rising 8-period simple moving average. With this in mind, our buy-in point will be a break of the handle high on accompanying significant volume during a period of the day which is not subject to head fakes. If you have questions, please refer to our manual. Enzyme Environmental Solutions broke out on volume through the handle high at a natural resistance on January 12th of 2009. Once in a position, our attentions turn to exit strategies. As noted in our manual, a profit's only realized should you sell your position at a higher level than which you entered. To this end, we look at some of the following. Resistance levels. Resistance represents a level where selling pressure overcomes buying pressure, and as a result, the trend in the stock that had previously been in an incline is turned back again. Thus, a resistance level is visually recognized as forming a high or peak at or near the same price level as a previous peak or high. Resistance levels increase psychological significance or strength the more it is proved to successfully change the trend of a stock when approached from below. On the daily chart, the initial significant overhead resistance level proved to be the 0.0014 level, and as such, a target we anticipated taking partial if not all profits. While not illustrated, the pattern projection target on the daily, in this case from the cup low to the handle high, also projected to the 0.0014 mark. On January 13th of 2009, the stock broke out on heavy volume into our projected target level, and is where we took partial profits, in this case 50%, watching further sell signals as the stock remained above the intraday rising 200 moving average. On January 14th, the stock gapped open on heavy volume. While we reduced our position based on the morning opening gap, we maintained a percentage of our position. Whether this was a breakout gap or an exhaustion gap would be based on how the price volume action handled the morning pullback. In this case, the intraday 200 moving average and the low of the opening gap held, and once again volume came into the stock as it advanced. We increased our position as the stock advanced off the intraday ascending 200 moving average, which served as support, as illustrated in the next slide. Believing the development of a breakout gap, we looked for potential overhead resistance levels. To this end, we looked at a pattern projection target based on a breakaway gap play on the daily chart. This is done by taking the prior low, in this case the low of the cup, to the low of the gap and projecting this forward from the high of the gap. In the case of Enzyme Environmental Solutions, this target was at the 0.0024 level, which corresponded to another resistance level, the overhead and descending 200 moving average on the daily chart. As always, we look for any of our sell signals to get out of a stock to preserve profit. One of our favorites is a rising intraday 200 moving average, which we used as a stop loss if broken by two successive candles in the period we reserved it within. In this case, we were observing the intraday 3-minute period. As you can see, this served us well as the stock advanced on volume and kept rising along the intraday ascending 200 moving average, each pullback and advance from serving as a buying point. The gap open on January 22nd of 2009 concerned us. After such an explosive move, and the gap down that occurred late in the day suggested an exhaustion gap and was enough for us to say this move was over and we exited our full position. We were apparently correct when this was met with confirmation with a volume break of the intraday 200 moving average. We generally view stocks like this as damaged and on the whole discard them for a period of time. But Enzyme Environmental Solutions returned onto our proprietary stock analysis software program forming what looked to be like another cup and handle pattern based on the intraday 3-minute period chart. As noted in our manual, patterns exhibit themselves in all time frames. In this case, one was forming in the intraday chart. Being that it was forming on an intraday basis, we looked initially for intraday price targets should the stock break out, which it did on February 2nd on heavy volume. Using a cup and handle pattern projection, we saw the price target at the 0.018 level, which was realized on February 3rd, where we took the majority of our profits. We will always keep a certain percentage in a stock until we see confirmation of sell signals. But Enzyme Environmental Solutions kept rising from support off the intraday ascending 200 moving average. The stock formed a weak consolidation between the 0.015 and 0.018 level, and once again broke out from the consolidation high in the afternoon of February 4th. Being this breakout was in the middle of the afternoon lulls in the broad market, and a time frame notorious for head fakes, we did not add to our position at this point, but instead let the remaining small portion we had run. Looking ahead at multiple time frame analysis, the 0.024 level on the monthly chart was the next significant price resistance level we saw, and a place where we had decided, if met, we would target to exit our remaining position should no other sell signals be triggered. As can be seen, this was another area of resistance based on trendline analysis of the same monthly period. We were lucky as our price target was met and we exited our position. To those still holding, we see the 0.036 level as the next major resistance level and a good place to consider taking profit on this stock that has virtually gone vertical in the past 2 weeks. Remember, bulls make money, bears make money, but pigs generally get slaughtered. Until next week, from trading-pennies.com, this is Thomas McClellan, where our goal is to help you learn to become successful trading the penny stock market.